Hello, hello, everyone. So pleased to welcome you all to Hong Kong Blockchain Week, our 2020 virtual edition. I'm Olga Yarshevsky. I'm happy to be here as much as I would very much happy to be on a real stage in Hong Kong. But here we are. Thank you, 2020. We all worked so hard to make this happen, to put this all together. And I'm so thrilled to kick off this conference with a very special forecast event that it's about to happen now. Our experts will share their unique insights and try to predict macro trends for blockchain industry and related industries within their major expertise. So no more chit chat, please give it up for our amazing speakers. I shall start with Ursula McCormick. She's a global banking and finance fintech sector lead at Kingwood and Mallesons. Hi, Ursula, thank you so much for being here. So Ursula is a star lawyer of Hong Kong. She's one of the Asia's leading blockchain and financial regulatory lawyers. And in 2018, she was recognized as a Financial Times Top 10 Legal Innovator of the Year. Now to Henry Arslanian. I think, Henry, you don't need no further introduction. So Henry is a global crypto leader at PwC. He oversees global crypto and fintech initiatives and also teaching those things at the Hong Kong University. Is that right, Henry?
Oh yeah, and very important teaching, very important. Very excited to be here and then look forward to sharing with you all today.
Thank you. Scott Thiel, who's the Asia head of global technology and fintech sector initiative with DLA Piper. Hi, Scott. Thank you so much for being here.
Thanks very much, Olga. Great to be here.
So your background is in engineering and dual qualifications in both intellectual property law and computer science. And you're an expert in all technical things in blockchain and fintech related. And thank you again for coming here. And I know you will be talking about digital asset tokenization, right?
We will indeed, yes.
Thank you. And last but not the least, Scott Littlewood, who's the head of business development in Tezos Asia Pacific. Hi, Scott. Welcome.
Hello, hello.
Scott is an early adopter of cryptos and also the co-founder of the first fully regulated institutional grade crypto fund, as well as securities custodian focused on digital assets in Singapore. And also Scott is a former emerging markets finance professional specializing in asset protection and cross-border asset structuring for private individuals, trust, family offices, and asset managers. So all things finance and tech. Thank you so much, Scott, for being here today. So I guess I will give the floor to our panelists. Today, we will try to do a forecast for 2021 and beyond. And Ursula, I shall start with you.
Thanks very much, Olga. It's great to be here with you virtually. And I'm going to give you my 5 global regulatory predictions. I love the law and love to be engaged in this topic. And my prediction number 1 is that next year we will see formal recognition of CBDCs. We will start to see them integrated into the financial system progressively. These will start actually in our home territory around Asia. We have 80% of global central banks looking at CBDCs, but Asia is the hotbed of actual deployment. We have Cambodia announcing, we have mainland China's DCEP project, we have the Hong Kong-Thailand corridor, we have Japan looking to trial next year. Not all of that will be blockchain, but we are going to start to see some amendments in law that will pave the way for recognition of not only CBDCs, but also other types of virtual assets for things like security settlement and other financial sector transactions, just as we saw in places like Germany. Beware the hype. A lot of these will be at the institutional level only, although what we're seeing with DCEP and Cambodia's Bakong being exceptions to that rule. The second prediction I have is that we are going to have a battle over cash. This flows precisely from CBDCs, and we're already starting to see differences around the globe. You have China, Sweden really pushing and embracing the cashless economy. However, there are some headwinds. You have places like Philadelphia, San Francisco, New York in the US, banning a number of stores from being cashless entirely, really recognizing the value of cash for financial inclusion. And in fact, Japan and Norway also signaling that they're going to support cash on an ongoing basis. The third trend I have for you is, of course, the rollout of virtual asset service provider, VASP, regulation in line with the recommendations from the Financial Action Task Force last year. We're seeing jurisdictions fall into line progressively, and that includes, as most recently announced, Hong Kong. What that will mean is, yes, AML and standards, but it will also increasingly mean prudential standards. And what I mean by that is things like insurance, custody requirements, suitability potentially moving into virtual asset transaction before they could be sold. Now, what you need to watch out for is things like the detail around those rules. How will they implement the travel rule, for example? Whether or not retail will in fact be shut out of certain key markets, like we're starting to see proposed. What I predict in that space practically is that we're going to see large institutions move into that. We're already seeing interest in expanding licenses, gaining licenses, and we know it's a long queue and it's tough to get those licenses. So that means established exchanges, established players, those that have been engaged with regulators, but also starting to see the likes of banks like DBS and other institutions moving rapidly into that space through a regulated mechanism. Practically, we will also see the launch of things like digitized securities. We had the great pleasure of working with the Fusang team on the $3 billion CCB digital bond. We're going to see more of that through these regulated portals. My fourth key trend is around DeFi. Now, it is the term of the year on a developer side this year. It will be term of the year from the regulatory side. Countless working groups at both a regulatory level and an industry level around DeFi. Now, I am a fan of DeFi. I think it is building finance for the future, but it's not under the radar, and it's certainly not beyond the scope of regulatory thinking. So already we're starting to work with regulators around how they might conceptualize things like developer liability, how far regulation should go, and perhaps why securities regulation isn't necessarily the best way to grapple with it. For those of you who were around during the ICO craze, think with that mindset, think ahead. It's really important to look across at least the next 5 years to see where a sustainable business model might flow. And then the fifth one is the dawn of the non-financial regulators coming into the fray for blockchain. This is the story of the growth of various regulators having something to say about technology. We will see the strengthening, increasing, ongoing strengthening of laws around privacy, strengthening of powers of privacy commissioners, and that will be a really interesting battleground as between privacy considerations and those that relate to transparency and AML. We will see the crafting of private rights of action. We will see more action from antitrust regulators. We will also see more regulation in the arena of automation and AI, very relevant for smart contracts and things like DeFi. I'm going to pause there, and I'm really looking forward to engaging with the panel later on.
Thank you so much, Ursula. That was very interesting, especially about non-financial regulators. That's a new class of regulators coming in the field. Okay, Scott TLA, now it's your turn. Thank you, Ursula. I'll give the floor to Scott now.
Thanks very much. I guess probably building on those trends that Ursula spoke to, and I think I agree that the sort of maturing of the regulatory frameworks is now it's almost in a position now where we are ready to actually build this ecosystem. I think one of the frustrations for a lot of the clients we've been working for has been regulatory uncertainty, the absence of appropriately licensed, whether it's dealer brokers or other parts of the ecosystem that are necessary, and the promise of the unregulated ICO market, which was dramatic in its rise and almost as dramatic in its disappearance. But how we now transition from the promise that the blockchain technology provides in terms of the opportunities to build new financial products that really don't look like anything that's available in the market today, and how we transition from that unregulated environment now into the same sort of opportunity and promise that we saw in cryptocurrencies and unregulated security, unregulated utility assets, into asset-backed security tokens. So my prediction certainly for the next 12 months and indeed going forward is the long promised boom in the security token offering, digital finance, creation of digitization of a larger pool of assets is beginning to emerge, and we will see a very rapid rise. It's probably been a slowly, and all of a sudden I think we're about to see quickly story in terms of that. A lot of parts of the ecosystem are coming together around that, whether it's the dealer brokers or the digital asset exchanges that are coming online. And while there are some parts of the world that perhaps in some areas lead where we are here in Asia Pacific, actually we are pretty well placed here, and we have some pretty dynamic markets and some maturing regulatory frameworks. So I do think actually as a region, we are well placed, not only well placed from a regulatory approvals and support perspective, but I think the culture of what we're seeing in the Asian markets is going to support a significant expansion of these types of activities. So we've been working very, very hard to leverage the benefits of blockchain technology and to overlay those technology attributes onto things like security token offerings. What technologies best support the types of features, the types of regulatory requirements that are going to be necessary in this whole new world. People talked about STOs as they never happened, STOs are dead. Well, they never got going because it's complicated. And we have needed the maturing regulatory frameworks to support that, and we've now needed the understanding of the way the technologies work to hand in hand with those technologies. So one area, for example, that we're working very closely with clients on is around smart contract assurance. And in the traditional world, as lawyers, we're very good at doing contracts, investment documentation, helping our clients build and provide rights and obligations and all of these things in the traditional contract world. But as we move into the digital world, these contracts are going to become autonomous. Smart contracts will be able to do things in an autonomous way. We need to be able to provide assurance to issuers and indeed investors that those smart contracts do what it says on the tin, so to speak, in terms of these were my rights. Is the code actually performing in a way that actually is consistent with the legal rights and obligations that I've signed up for, or that were promised in the respective offering documentations or prospectus? And that level of assurance, both in the traditional legal world and the smart contract world, is something we've been working very hard on in terms of bringing that level of assurance. Again, I think Ursula made a comment about none of this is beneath or going to avoid regulatory scrutiny, and therefore what probably happened in the ICO world under the radar or circumventing regulation is not going to happen in the real world of asset-backed tokens. We think that's a good thing. We think it's obviously essential that this is not a market where people look to fundraise because they were unable to finance or to obtain funding in the ordinary ways. Actually, what we're looking to do is work with clients that have high quality assets, that are looking to build products that are sophisticated and legitimate and provide levels of disclosure and information flows that actually provide enhanced transparency to what's potentially available in traditional markets. So again, one of the areas we've been really looking at is leveraging blockchain technology around data democratization. How do we share information through the blockchain, through the tokenization process in a way that actually gives not only asset owners, but would-be new investors greater information flows, the ability to do diligence instantaneously rather than having to go through the friction and overhead of doing this on a case-by-case basis. So again, a great way of the technology bringing efficiencies to the process of building and selling these products, and also managing them going forward. I think the other thing that I think is going to be really interesting is to watch the emergence of brand new products. I'm really a contracts lawyer. I'm not a dyed-in-the-wool securities lawyer. As a contracts lawyer, I feel somewhat unconstrained by regulation in many respects, because contracts are relatively free. You can build things into the contract that the parties agree. And what we're seeing as we start to build tokenomics models, which are effectively contractual rights models, these things don't necessarily look the same as the way traditional regulated financial products look, because we're looking at them as a contractual structure rather than necessarily as a pure financial instrument. And the conversations we're having with our clients are really quite interesting, because they're saying, wow, that isn't a product I've seen in the market, or I can't access a project that looks like that in the way the markets currently operate. And that's really exciting. So for me, the prediction is significant growth in the security token market, the creation of new products, and an expansion of this very dynamic marketplace, and the creation of a digital capital market, which will be very exciting. And there's a huge opportunity for Hong Kong and Asia Pacific to take a global leading role in that piece.
Thank you so much, Scott. Interesting new market opportunities there you mentioned. Thank you, Scott Littlewood. It's your turn now, please. I know that you have a number of interesting trends in your pocket to talk about.
Yeah, let's hope so. Hi, everyone. Pretty well covered by the other panelists already, but I'll briefly touch on 3 blockchain trends to look out for in 2021 and beyond. The first is, blockchain trends in the RegTech and data privacy laws. Data and storage are, imperative in the next layer of infrastructure of blockchain, and we think, the next unicorn will be building with on-chain data and oracles via traditional data providers. Data laws impacting cross-border data flows, such as data sovereignty, data residency, and data localization, will play a bigger part for payment processors, such as credit card companies, to look at ways on how to decentralize the collection, storage, and processing of data. Decentralization is not just like a peer-to-peer movement to disintermediate financial institutions to compress costs tied to payment transactions, but it's also a way to comply with data laws. So whitelisting local nodes to process domestic transactions on public blockchain could have some interesting considerations when thinking about the data law challenges that payment providers face currently. Our strategic integration with BSN enables permission Tezos nodes to be deployed into the China market. Predatory credit card interest rates from banks is another reason why the credit market developing in the crypto space will be pretty interesting, we think. By building tools on the blockchain to track assets versus liabilities and payment records for various transactions, individual wallets can be given trust lines or a score to represent the credit risk of that wallet. And we're working on a couple of those projects at the moment. Second trend is more on the macro trend for crypto wallets in Asia. The wide adoption of cryptocurrency wallets by individuals, startups, and SMEs globally has helped spur market demand for dApp wallets. The Tezos platform supports the infrastructure and tooling required to build decentralized multi-chain smart wallets, enabling developers to build, user-controlled, censorship-resistant applications on a distributed network beyond the purview of a single authority. In spite of the obvious sort of openness in the market, we must heed that regulations still apply in Asia. And as everyone on this panel knows, some countries such as Singapore, Hong Kong, and Japan are more open in promoting and welcoming the blockchain and digital assets industry by issuing national legislation to regulate the industry, by enabling banks and other financial institutions to provide services to virtual asset service providers and its technical service providers. In China, we think compliant wallets will be used by the Belt and Road Initiative members to trade, and it'll be interesting to see how this ultimately impacts the yuan going forward, especially with platforms such as China's BSN, Blockchain Service Network, bringing together cloud service providers and different chain protocols on city nodes. I think that's super interesting. We're for the trend, we're going long China GDP based on the results of an experiment from the Bank of England years ago, which ran simulations using digital currency. We think the velocity of money caused growth in the modeled economy while decreasing expenditures as the cost of printing money came down dramatically. Last point is DeFi, which was touched on a little bit earlier, but small point that we think that tech companies are going to be the new banks of the future, providing utility services such as payments and microloans for a fraction of what the current bank charges. And once deposits shift, there'll be less capital on the balance sheet of banks to use in their wholesale or their iBanking businesses. So pretty exciting times ahead. Thanks.
Thank you, Scott. So I guess we will now proceed to we will now proceed to Henry. I know that you
Wow,
are
always,
going
wow,
to describe the
such
three.
interesting topics, huh? Such interesting discussions. Well, maybe with I'll finish off. Maybe I'll give to all of you today. First of all, it's super exciting beginning of the week with the blockchain week. Maybe the 5 things that I'm watching this week. Really, the 5 big topics. Many of them will be mentioned by our great panelists, but really to help frame the discussion that we'll have in a couple of minutes. Really, the first item I'm really following is really the developments with stablecoins. Let's start with the easy stuff. You know what's really happening. Really, the amount, the assets of stablecoins has doubled over the summer. Today we have over $20 billion in assets when it comes to stable coins. And some of the big things that I'm watching over the next couple of months. First, if there's more stablecoin usage when it comes to commercial transactions. One thing we saw last couple of months, increasingly trade between Asia and Africa, Latin America, increasing stablecoins. So whether that's going to pick up, especially that it can avoid us a lot of the correspondent banking fees and other annoyances that are involved in commercial trade today. But also is a big unknown that I'm watching right now when it comes to stablecoins is, of course, Libra, to see what's going to happen with Libra and when it's launched, if it's launched, and when it's launched, and how the impact it may have when it comes to adoption. Which brings me to my second point that I'm watching right now very closely is increased retail adoption. Of course, elements like Libra are bringing a lot of attention, but also the bull market that we're going right now with the Bitcoin and the crypto assets being at where they are, obviously generates a lot of buzz, generates a lot of FOMO, and that, whether we like it or not, brings a lot of attention on the industry. You know, it's going to be very interesting also the number of usage of wallets. If you look at the data today, according to Cambridge University, we have more than 100 million, users that use exchanges. That's up, by the way, from only 5 million 5 years ago. Went to 5 million to now over 100 million. This is according to the data we had the last quarter. So a lot of interesting developments. It's way easier now to open an account on an exchange than it was only a year or 2 years ago. And of course, here the big unknown that I'm watching is developments like PayPal. PayPal, as we know, is launching right now as we speak to the U.S. customer base. You know, it's a couple hundred million customers, and as of next year, be launching globally. So very interesting development to watch for what I call the average user, like my mom, who once always never understood what I do. At least it makes it easier for them and people like that to just be able to access the ecosystem. Number 3, which relates to this, which is very important, the retail flow, is institutional flow. What's happening with institutional investors? We saw the last couple of months, obviously, a lot of more and more institutional firms coming in. More recently, with the news of JP Morgan and allegedly what was reported in crypto media with DBS. So really, a lot of the interest about the institutional players coming in. Very interesting from that perspective. Why this becoming easier? Obviously, there's client demand. There's obviously more establishment, but also there's regulatory clarity. Today, only 5% of regulators do not have somebody working on crypto. So again, it makes a lot of comfort, eliminates the risk of being fired, which at the end of the day, everybody's selfish. Everybody works in an organization, looks for his or her best interest, eliminates that risk. Number 4, what I'm watching is central bank digital currencies, CBDCs, like was mentioned previously. Obviously, a lot of attention, a lot of focus. I'm watching when it comes to wholesale CBDC between the central bank and member banks, particularly what's happening here between Hong Kong and Thailand, which I think is probably the most advanced CBDC, the wholesale level right now in the world. So paying a lot of attention to what's happening there. And of course, when it comes to retail CBDC, the big elephant in the room, close to where we are, obviously what's happening with China, with the e-renminbi or DCP, whatever you want to call it now. The name is changing all the time. But as we know, the data that we're getting is quite fabulous, incredible. According to the last data we have from a PBOC, over $2 billion, 2 billion renminbi were used in the last phase. That's around $300 million in 4 million transactions and 12,000 use cases. So again, very interesting what's going to happen when it comes to the future of money. China is way ahead of everybody else, and I think this makes it very interesting. And last but not least, we need to finish about the big, probably a more edgy topic that I'm following is, of course, decentralized finance, DeFi. Frankly, we're still the total value lock in DeFi is still very limited. It's around, between 12 to 13 billion dollars. That's if potentially we're double counting, but let's say it's 12 to 13 billion dollars. Frankly, it's at the very early stage. We're at the fringes, even at the crypto ecosystem. But what I love the most, if I put my academic hat on or my author or my lawyer hat on, is that it works. From a purely, it's for the first time we're able to show that some of the elements that we've been discussing for a long time in DeFi, especially the composability, that I can take any kind of DeFi and put it together, the financial Lego model, and that works. And that's super, super exciting. So again, I always say it, and I'm repeating myself, this is the most exciting time in the history of finance, in the history of money. And this is actually, I hope forward to discussing this, not only the panel, but for the rest of the week as part of the Hong Kong Blockchain Week. So back to you, Olga.
Thank you, Henry. Amazing predictions. Thanks a lot. We will now proceed to a quick fireside chat questions for each one of you. And Scott Littlewood, I shall start with you. So as Tezos is one of the most tech advanced companies out there, I can't help but ask you as a business development person about enterprise and institutional adoption. What do you see as the main goal for such adoption for blockchain companies in general and for Tezos in particular?
Yeah, sure. Next time, can I not go before and after Henry? Because he makes me sound extremely dry with energy. So maybe I'll try and fire myself up a little bit. But it's just a small correction. Tezos is not a company, but it is an advanced open source, permissionless, and self-amending blockchain technology. But as to your question, each blockchain journey is unique for every institution and enterprise. Through the lens of our industry expertise, we help today's visionary technologists navigate the complexity of the blockchain ecosystem to design and grow comprehensive blockchain strategies that will drive breakthrough innovation and revolutionize industries. As for our main goal, it is to empower innovative leaders and creators to harness the power of the Tezos blockchain across multiple industry verticals such as financial services, real estate, gaming, and more. We welcome TZ APAC discussions with any institution and enterprise that wants to learn about Tezos and obviously start their blockchain journey. So please do reach out. Thanks.
Thanks, Scott. That's fascinating. Scott, Phil, now to you. This is very interesting what you mentioned about new market opportunities and you speaking to your clients about the new possibilities. So what do you think it's the next type of asset class that hasn't yet been digitized, but definitely should be?
Wow. It's quite a tricky question to narrow down to one asset class. One of the things we're seeing is a real diversification of interest from people coming to us and talking about what it is they want to digitize. There are some probably more mature areas, real estate and fine art, for example, where I think there are already a number of use cases and clearly a huge opportunity, not least of which in the case of real estate because of the sheer size of the asset class. But actually, we are thinking and having conversations about a number of other areas that even a matter of weeks ago I wasn't thinking about. So whether it's portfolios of intellectual property rights or fine wine holdings or subsoil kind of mineral deposits and the use of a token to finance the extraction development with the promise of future returns being shared. Another one that we're thinking about quite a lot at the moment is in the reinsurance market, the ability to effectively tokenize reinsurance liabilities and to allow reinsurers to then fine-tune and consistently move through fractionalization and trading of reinsurance liability so that they can fine-tune their risk profiles, both from a regulatory perspective and also a commercial risk perspective. So it's a really difficult question to say what's the one. I think the thing I'm finding most exciting actually is the number of people that are coming to us and starting to talk about what about this and what about that, and is this another way we can take carbon credits is another great example where national governments have failed to create an effective global carbon trading system. Maybe private enterprise and the role of blockchain can actually achieve that in a way that national governments have been unable to. So really, I think it's a truly limitless pool of potential asset classes that can benefit from this. And again, back to my earlier point about the freedom of contracting, actually we can then structure things that work for these asset classes, and the technology can then reduce the existing friction points in terms of making them happen. So there isn't definitely one obvious one. I think really the exciting thing about this space is everything's up for grabs.
Thank you. Ursula, now to you. I love to follow up on your speech. So what would be your best advice for a company that would be launched, let's say in 2021 or 2022 in the blockchain field, whether it be, I don't know, as Scott just mentioned, reinsurance or digital art tokenization, or whether it be a virtual asset exchange. So let's take it down to just one thing to pay the most attention to and one thing to definitely avoid.
So my advice is the same as it was in 2017. Get out your crystal ball and think about your business in 5 years, in your industry in 5 years. So if you're a developer of DeFi, think about how regulators will try to come after you. Think about where the gaps are. Think about where the risks are. Think about where the wrongdoers will be. And there are, they're the gaps that you're going to fill. You're going to have to think about this long-term sustainability of the business. You have to think about it from the perspective of potential stakeholders, banks, partners, others that you might rely on, even if ideally you exist in, the magic of cyberspace. So that's sort of the key tip I would give, and that's all what, all of us on this panel do. That's what we build. In relation to sort of what, things to avoid, it's just the trap of thinking that it's all too hard for regulators. It's all too hard for the law to even grapple with. We're talking to developers all the time. We're working through unpacking what the technology does. It is not understandable. So whether it's an algorithmic tool, whether it's an encryption technique, for those who are developing it, great, be in the weeds. But it's also important for the legal and compliance teams in those organizations to really understand that technology, to unpick it, ask all the silly questions.
Thank you. Okay, Henry, and now to you. So let's say you mentioned things that you're going to be watching in the next few months, but let's say it's 2031 approaching. Name 3 things in people's everyday life, whether it's a routine things, personal things, or in the business world, that has turned 100% from physical to digital, that were 100% digitized, whether it be a paperwork, I don't know, some housekeeping jobs or anything.
Oh, what would that turn? Oh, I mean, there's a lot of things I would love to see turn. I hope it happens in the next 10 years. One of them I see with the many lawyers in the panel. I hope a lot of the legal agreements that we have today, I think it's unacceptable that people don't have access to justice. For many of you listening to us at home, I'm sure at one point you wanted to see a lawyer for a contract, an employment lawyer for buying a house. And why you didn't? Because it's expensive. It's unacceptable today. Even in a country like the United States, 80% of people do not have access to the legal system just because of cost. And I have a TEDx talk on this for those interested. So that's something as a lawyer, as somebody who's been in this field for a long time, I'm very passionate about. I think I hope we'll be able to tackle. The second thing, but this relates to, is really when it comes to government services. Anybody that has, from having a kid to having somebody die in a family to having a basic civil services, it's absolutely unacceptable how slow and government services are still paper-based. In some countries, even including where we are, where you need to have a stamp still, which is amazes me all the time. So I hope some of these things will be able to change. And third, I would say when it comes to broader financial services, even in the simple stuff, my lovely bank the other day turned down my change of address because my signature specimen did not match, which frankly in 2020, this is insulting to frankly the financial services industry that we're seeing this. So I think some of this is basic examples to actually fund the financial industry focusing on the customer services, and actually deliver. I think we're seeing a lot of change from that perspective when it comes to broader fintech. But there's certain things that I think I'm watching for the next decade that I think will be very relevant. I mean, we discussed before CBDCs. It's great for policymakers because you have full visibility. If I was a central banker, I have great visibility of what is the impact of my monetary policy on a country. Actually, I really believe CBDCs for the first time in a long time will give us a fighting chance against money laundering. If every transactions are there, there's visibility. Actually, corrupting people with digital money almost becomes impossible. On the flip side, I think we're going to have a lot of policy and societal debates about the right of privacy. Maybe there's transactions I want to do that I don't want my husband, my wife, and my friends to know. Maybe people don't want the government to know. Maybe I want to make donations that I don't want people to know. So I think there's a lot of these things that are coming into play that I think will be very, very interesting from that perspective. And last but not least, I really hope when it comes to digital assets, we'll be able to empower people, right? So not only from a purely financial inclusion perspective. And there, I hope we know with CBDCs and digital wallets, we'll be able to achieve a lot, what's happening in fintech, but also on elements like what Scott mentioned on tokenization. You know, I mean, a very good example, I'm right now in Hong Kong, where we had some social unrest last year. One of the reasons is people are not able to buy a house. Very simple example. Whereas with tokenization, maybe people still need to save for a down payment, but in between, they're able to get slowly access to that real estate market by being able to tokenize assets. And I think that opens up so many opportunities of not only from a pure access perspective, but also the broader investing public and so on and so forth. So I'm very optimistic over the next decade when it comes to digital assets and fintech. I think there's certain challenges, but overall, again, come back to what I said, this is the most exciting time in finance, and we're privileged to be able to see it and have a part in actually driving it.
Thank you so much. I'm happy that we all share your optimistic long-term view. Okay, everyone, thank you so much for coming today. Thank you for sharing your insights and your predictions and your forecast. Please tune in. Hong Kong Blockchain Week is going to be an amazing week. We have a wonderful conference tomorrow, and it's going to be all about CBDCs, digital asset tokenization, about cybersecurity, about regulation, of course, lots of interesting topics, 100 of speakers from all over the world. So please enjoy the amazing conference, the amazing content, and thank you so much again for making Hong Kong Blockchain Week great.
Thanks for having me.
Thanks, everyone.
Thanks.
See everyone in Hong Kong.
Yeah, bye.